Hello, this is Carlos Asilis from Glovista Investments, here to share our market outlook for the week of March the 22nd. First, a brief recap on this past week's major global macro and market developments. At the macro level, this past week's calendar confirmed a continuation of the economic recovery globally. Examples of this included a very strong release out of the Philly Fed survey, in addition to stronger than expected diffusion sentiment indicators out of other regions around the world. On the virus front, the vaccination rate in the US continues to strengthen, now with close to 1/4 of the population having received the first vaccination shot. Outside of these developments, we also witnessed a number of developments from an events perspective. The FOMC meeting this past week was a momentous one, at which medium-term projections were revised by the FOMC board. These revisions essentially are dovish. The FOMC expects inflation to accelerate over the near term, but it qualifies such a spike in near-term inflation dynamics as transitory, a view that we at Glovista very much espouse as well. On a medium-term basis, the FOMC now expects the policy rate to be hiked only around the year 2024, which from a risk market perspective conveys a bullish message. The second important development this past week was an important sell-off in energy prices, with WTI declining close to 6.5%. We attribute that dynamic primarily to technical market positioning and considerations. And so we view these dynamics as transitory. The third important development this past week was evidenced this past Friday with an announcement by the US Federal Reserve, whereby it's announced its decision not to extend a rule that had relaxed the supplementary leverage ratio requirements of the US banking system. And as a result, bank stock prices sold off this past Friday. We view this more as a ratification of the continued healing of the US economy following the pandemic shock. As we look at this past week in terms of the market developments, risk indices sold off, primarily on the back of positioning. Risk markets are overbought short term, given the pace of inflows into equity funds globally, but also given, of course, these developments on the energy markets and given the developments, of course, on the Fed's decision this past Friday. When we look at the risk market developments this past week, the S&P 500 declined 75 basis points, same for emerging market equities, and small cap stocks declined 2.75 percentage point. As we look ahead at this coming week, the calendar is relatively light. It includes the PCE inflation readings out of the US, the German IFO survey, and other regional survey indicators out of the Richmond Fed and Kansas City Fed. Our views at Glovista remain unchanged. We maintain a bullish outlook on value-oriented markets, particularly emerging markets, the Japanese market, as well as US financials, and followed, of course, by the high-quality US large-cap tech. Thank you and have a good week.